The surge in technology stocks on American stock exchanges has begun to retreat, while inflation, previously believed to have decreased, is gradually resurfacing. Just as debates about whether it has hit its lowest point are emerging, a significant issue in China's real estate market is moving towards a more serious problem. In this video, we will delve into these subjects and more. Let's begin our analysis of the current agenda and market conditions. In the American stock markets, a robust rally occurred, especially during the second quarter of the year. This rally was particularly evident after Nvidia's announcement of surpassing $4 billion in revenue, resulting in a staggering $900 billion surge in market value. If you recall, we observed this remarkable performance that seemed to be built on somewhat peculiar foundations for a few months. However, approximately 2 weeks ago, this upward momentum gradually reached the zenith that you had been observing, ultimately touching around the 16,000 mark. The indicators were pointing towards this, and the pace was so rapid that we even discussed the possibility of an even swifter decline. These anticipated sales materialized, and we witnessed a dip below 15,000, with the Nasdaq hovering near this level. During those days, inflation was a factor. I'll return to that shortly. However, what was of greater significance was the likelihood of substantial trouble, which had likely caught the attention. This issue had probably been raised within the White House, prompting someone to alert Biden about a major real estate concern in the Chinese economy. An announcement was made, likening it to a ticking time bomb, and we began to witness startling figures, such as a 33% drop in real estate prices in China within a month compared to the previous year. We're observing the challenges faced by Country Garden, a real estate behemoth in China, as its stock price plummeted from $19 about 4 years ago to 89 cents, a staggering 95% decline. It's evident that the inability to service debts has given rise to problems, and the severity of the situation is growing. Recall, if you will, that it all began in October. I had elaborated on the prevalence of major bankruptcies and how rising interest rates would puncture the bubbles in the system. And as anticipated, one by one, the global real estate market and the global bond market began to experience bursts. While there are global giants who appear to be turning a blind eye, this outcome was inevitable. Sooner or later, a significant problem in our world would emerge, whether stemming from American banks, Chinese real estate enterprises, or currencies of debt-ridden nations. As such, pinpointing the exact origin and magnitude of this problem is elusive. Nonetheless, we can anticipate that these issues will continue to unfold sequentially, much like in the 1970s when rising inflation occurred in the backdrop of increasing interest rates, leading to corporate struggles and significant fluctuations. Currently, we find ourselves in a stagflation environment, mirroring a similar scenario. And speaking of stagflation, has inflation truly subsided? Following the release of inflation figures in the United States on Thursday, a sudden surge occurred in the stock markets. Futures markets followed suit, with the upward trend persisting into the initial half hour of the trading session. Initial reports heralded the decrease in inflation on American lists. However, upon scrutinizing the MarketWatch report at day's end, a different story emerged. American stock markets had surrendered all the gains prompted by the inflation data, even dipping into negative territory. Thus, Thursday presented an unusual juxtaposition, with a robust opening and almost reaching the peak of previous days. Subsequently, Friday saw a rapid decline, maintaining a consistent pace. Consequently, upon meticulous examination of the report, it becomes apparent that inflation has resurfaced. Despite all this, concerning the inflated stock prices attributed to inflation concerns, sales were observed in America, adjusting to the inflated stock prices in various ways. Throughout the week, Apple's stock price declined from $191 to $170, as you might recall from the prior week.